Good morning. Today is Monday, June 3rd. This is Todd Mitchell, and as you recall, I was not here on Friday. I was actually out of town and want to take you through a bunch of stuff today. So let's get started. The first chart that we're looking at right now is the E-Mini S&P 500, and it looks like the market's starting to roll over now. I mean, obviously, this bar right in here last week was a big reversal pattern, right? A big outside engulfing pattern. Took out the high, took out the low with a lot of volume, okay? And what I was really waiting for to confirm that the market should, in fact, start moving a bit lower is this low right here. So we got this reversal pattern here. The following day, we got a lower low and a lower high again. But then we rallied up. Okay, we were not able to test that high. We failed that level, and we've come down actually through these lows. And again, that happened on Friday, and I was out of town. So we closed near the low of the day, although today will open up a bit higher, about 4 S&P points higher. So what I want to do now is measure some Fibonacci retracements. I'm going to measure from the last swing low. Okay, this low right here, okay, is what I feel is, significant that you would want to measure fibs from. So I'm going to take it from that low, drag it up to that high. And as you can see here, the 38.2% retracement from the run from this low up to the high of the year and the all-time high. Look at the 38.2% retracement was nailed on Friday. That was Friday's low. Okay. So it'll be quite interesting to see if we get some type of bounce in here. If we do get a bounce, well, we're going to get about, the market is opening up higher today, about 4 or 5 points higher, but we'll see what happens today. Really what I'm looking for is I'm looking for the market to move a bit lower, let's say near that 50% retracement, about 1607 in the futures. Okay, we're going to be getting close to that 50 exponential moving average. And instead of automatically buying it, looking for the bounce like we've seen all year long, I would want to be a little bit more conservative on this pullback, and I'd want to wait for a price pattern, a reversal price pattern to the upside before initiating a long position, okay? So what I'm talking about here is either a bullish engulfing pattern or waiting for the market to consolidate, okay, into a little range with preferably an inside pattern. And if we were to get something like that, I would look to go long if and when the market took out the high of that inside pattern. These are really the two patterns that I would be looking for to initiate a trade to the long side again. Now again, I would really like to see the market pull back closer to that 50 exponential, the better. Again, I drew the fibs from this low right here, right, up to the high of the year and the all-time high, and we're at the 38.2. Again, Friday we hit that 38.2% retracement. I would love to see the market drop about 20 points even lower, 20 E-mini points lower. All right, so that's my thoughts here on the general market. Let's take a look at Netflix. Remember on Thursday I outlined that I was really looking for Thursday to be an inside pattern. We did not get that inside pattern. Okay. Thursday we actually took out that high, and then on Friday we took out the high. So really no trade there. I was really looking for the market to either consolidate and create that inside pattern, or I would have been a buyer right here at this white horizontal line at 206 right here. But we're nowhere near that. So that is not setting up at all. Market just opened up. Let's take a look at that now. Let's see. All right. This is the 3-minute E-mini chart. Market's opened up a little higher, 1632, closed at 1628 3/4, so a little higher. All right. Okay, let's take a look at a couple of our other trades here before we go back to the 3-minute S&P chart. All right, looks like CEF, the stock CEF, is going to be opening up a bit higher at, let's see, $16.20. We haven't seen an opening yet in this stock. Closed on Friday at, just opened up. Closed on Friday at $15.96. Opened up just a minute ago at $16.03. Again, we have, let's see, we've moved our stop to $15.43, right where this white horizontal line, 1543. So we're risking about 7 cents on this trade. We're still looking for this market to move a bit higher here. Right, our first objective is $16.90. But at this point, I'm looking at Thursday's high of 1622. If we get close to 1622 and we're not able to really break through that high, I might take something off the table. And then what I would do at that point is move my stop up further, probably to below Friday's low of 1586 and lock in some profits there. Let's take a look at gold. We've been long gold for a little bit here, a few days, looking for a potential double bottom. Now, I've gotten a few questions emailed. Why are you long gold? Gold is obviously down. Obviously, it's down. I know that. This trade isn't trading with the trend, right? The trend of gold is down. As you can see, all the bars here are red, and that denotes down. But anybody with two eyes can see that gold's been trading down for the last, I don't know, 6 months or so. So it is down, but this trade is, it's a counter trend trade, right? Counter trend against the trend. So again, we're looking for the market to bounce up. We sold off. Gold sold off on Friday, closing on the GLD ETF, the Gold ETF GLD closed at 133.69. We've opened up and we're trading at 134.79 right now. So again, we have moved up our stops. Remember, our initial stop was a close below the double low. But what we've done is we've moved up our stop. As you can see, our white horizontal line, we moved it up quite a bit. We moved that up to 132.60, 132.60. And Friday's low is 133.89. So we never got stopped out. So again, remember, we're long at 133.75 and our stop's now at 133.60. We're only risking $1.15 on this, which is next to nothing. So we've been able to move the stop, so we're risking less. Remember, the name of the game is trade management. It's losing as little as possible, and it's working the trade once you get into that trade. All right, let's go back to the 3-minute chart of the E-Mini S&P 500, and even though I wasn't here on Friday, taking a look at it, it kind of, when you look at it, and there were some really nice trades, and I want to point those out to you so you could use this type of analysis in your own trading. Look at the market opened up lower on Friday right here. So it opened up, the bars were immediately red, denoting that the trend was down. So what you want to do immediately is sell a rally, okay? So the market opened up down, pretty much stuck at the daily S1 at 1346 and rallied. As the market started rallying up, you would be looking to go short. Look at this. You opened up below the 50 exponential moving average, right? The hot pink, right? The 50 exponential moving average. You opened up below the 200 exponential moving average, the purple line. And you opened up below the daily pivot number of 1653 3/4. So as the market opened up here and started rallying up, you're looking to go short. You're looking to short the market right in here. And look at what the market did. It stuck right in there and came right back down to retest the low. So there's one good potential trade right there to the short side there. Then when the market rallied up to this high, definitely a fake out. Should have been looking to buy the market right in here, back to the daily pivot. Since the market rallied up through that daily pivot here, as the market came back, you'd be looking to buy that market on a pullback. You would also want to measure your fibs from the low of the day to that high. And as you can also see, the bars turned from red to green right in here. So the trend was up. You'd be looking to buy it right in here, but your stop would have been right in here. So that was a losing trade. There's no doubt. That's a losing trade. But as soon as the market broke down again, you'd be looking to go short right in here. I mean, a beautiful confluence area. Back to the daily pivot again, right between the 50 exponential and the 200 exponential moving average. A beautiful trade with your initial stop loss right up in here, okay? And as you can see, that was really the trade of the day. The market sold off for the remainder of the day. And if you're flat right in here, this would have been a good re-entry right in here. So not bad for day trading. Again, for those of you that maybe have a couple hours during the day to be able to look at a 3 or a 5 minute chart, there are plenty of opportunities during the day where you can take advantage of some of these movements. Let me look at one more. I know this is getting long, but let me talk about one more market that I'm pretty excited about. All right, this is the ETF T like Todd, B like boy, T like Todd again. TBT, which is the inverse bonds. Okay, this is an interest rate play, and you've heard me talk about this for the last, I don't know, 6 to 8 months. You've heard Doc talk about it. I think he talked about that on Friday. But again, this is a long-term play. I mean, if you think that interest rates are going to stay next to zero for the next 5 to 10 years, then this type of play is not for you. But if you think that interest rates are eventually going to move off these lows and start to normalize here in the next couple of years, the TBT play it's an inverse fund. So as interest rates go higher, so does the TBT. So the 30-year bonds would go down, right? And TBT would go up in price. And the big number here, the real big number here, is this white horizontal line, which is sitting on this high right here. It's $69.64. I mean, look at Friday. It penetrated 69.69. Actually took it out, but closed a lot lower. I want to see a couple days closing up through 69.64 for this to confirm that this market should move higher and interest rates should move higher. Okay, so, but honestly, this is a long-term play, and I was positioned a long time ago. But, you know, as you know, a couple months ago, I stopped myself out, took a pretty nice profit there, and I was looking for reasons to get back in. And I guess when the market was retesting these lows here, I should have been stepping my toes back in the water here. I didn't do it, so I am looking to get in on a pullback here, anticipating a run back up through these highs right in here. Actually, what I've been doing on any pullback is I've been selling puts. So again, I know it's a long video. Hope it helps. If you got any questions, reach out, call me, let me know what your questions are, and I'll be more than happy to answer. Have a great day. Bye for now.